Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 25th day of January 2021, and this is the daily report for gold and silver. Quiet action with moderate losses in gold and silver. Traders are focusing upon the upcoming FOMC meeting, which will begin tomorrow and conclude on Wednesday. I think that we could see quiet activity up until then, and we will see some positioning prior to the release of the statement and press conference by Jerome Powell. Let's take a look at current pricing. Dollar strength today was a major component, taking the precious metals complex lower. Currently, we are looking at February gold at $1854.70, puts it down about $1.50 on the day. In contrast, when we look at spot gold, $1855.35, and that's actually in an uptick mode right now. Basically, we do have the February contract winding down as traders begin to switch into the April 2021 contract. This first chart that we are looking at is a daily chart of February futures. You can see today's trading activity with a contracted range and a close pretty equal to the open. My belief is that traders are on hold awaiting any kind of news out of this week's first FOMC meeting of 2021. This daily chart of February gold clearly shows how we are caught between the 200-day moving average, the 50-day moving average, the 38.2% retracement, which gold is currently trading above, which is why I am pegging current support at that level, which comes in roughly at 1850. I believe that that is a key and critical level that the market must hold. We are trading below the 50-day moving average, and that is really what we want to see gold trade above before we can return to a bullish demeanor. While I remain cautious about the short-term price movements in both gold and silver, I'm extremely optimistic that we will see a pretty dramatic rise either at the end of the first quarter or the second quarter of this year. When we look at this on a technical basis, we can definitely see this low that formed here at about 1775. That, of course, occurred at the end of last year, and that was really the conclusion to the retracement, which began in August of last year when gold hit its record high at 2,088 up until the beginning of the year. From there, what is noteworthy is that we can look at a series of higher lows on these last two moves, and in terms of our highs, a slightly higher high. And that is definitely a positive statement. The fact that we have gold back close to the 50-day moving average is also a positive statement. And I believe that the numbers that we are looking at in terms of our long-term forecast are still fully intact. Therefore, traders, my recommendation is to remain neutral in terms of our stance in gold futures, at least until we hear the statement and press conference, which will begin on Wednesday of this week at the conclusion of this month's FOMC meeting. Silver, basis the most active March contract, lost 17 cents today, about 0.7% at 25.38.5 cents. And on the positive side, it is trading above both the 50 and 100-day moving averages. Silver is still trading just above the 50-day moving average and 100-day moving average. However, on a technical basis, I put resistance at $25.75, and that is based upon the 23% Fibonacci retracement. One of the most noteworthy aspects of silver pricing recently is that if you recall, we had the 50-day moving average cross below the 100-day moving average mid-November last year. And until that time, we saw it widening a little bit. But if you look at the current pricing, we can see that they're pretty much at the same price, the 50 and 100-day moving averages. So it appears as though we will see that golden cross between those two averages, which makes it extremely bullish. If that in fact happens and we get a break above this level of resistance at 25.75, I would be extremely optimistic about gains over the next couple of months in silver. We will remain flat in our futures trade until those parameters are met, but we will maintain our long positions in SLV and GLD. Lastly, although silver and gold are both trading sideways in a tight congestion band, we have to note that like gold, we do have a series of higher lows along with a series of higher highs. Although we are currently flat with no active futures trades, we are still in our ETF trades GLD and SLV. GLD is currently fixed at 174.05, up 15 cents per share. SLV lost 11 cents per share, almost a 0.5%, and is currently fixed at $23.55 per share. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.